And good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top highlight events that are expected to be impacting markets. Some of the key highlights will include the current tour by US President Donald Trump in the Middle East. So we'll also be looking at economic data coming for the US, mainly the US retail sales, the producer price index, as well as the unemployment claims data. So at the end of this session, we should have covered some of the key highlights that are impacting major markets. We also do some technical analysis, try to understand what are the current market structures and where prices might be headed next. So as always, I like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence. So let's get this started. I already see some people already in the house today. Thank you, Paul Kerry, for joining and being the first to comment. You can see Johnny, Eric Muturi, Mirega, Kaz, Collins, can see Wangari in the house, Rono Hirari. Thank you guys for joining. And of course, if you haven't subscribed to the channel, make sure to subscribe so that you get a notification whenever I have a live session. And of course, the market snapshots happen every day, Monday to Friday at exactly 11 a.m. So let's begin right away with the economic calendar. Of course, we've had some data coming in this morning, mainly from Australia, where we had a big surprise in the job report. So the Australian economy created 89,000 jobs, and this was much higher than the expected 20,000 jobs, and of course higher than the previous reading of 36.4k jobs. So this was a big upside trajectory in the job market in Australia, and the unemployment rate remained the same at 4.1%. So initially, we expected to see an instant reaction of the Australian dollar strengthening. This happened, but then later on against the US dollar, we have seen the Australian dollar take or give some of those gains back in the markets. So then this morning, we had the GDP data coming in from the UK. So month over month, we had a 0.2% increase in April. This was better than the expected 0.0%, but worse than the previous reading of 0.5%. And then quarter over quarter, it was a 0.7% growth, which was higher than the expected 0.6%. And of course, a big increase from the 0.1% in the prior reading. So clearly, the UK economy is making some good steps in recovery, and we should be seeing some more positives from the economy. So there was quite a set of other data that came out with the report. One of them is construction output, which was on an uptick. So goods trade balance was on the negative side, meaning that the UK is still importing more than it's exporting. Index of services was as expected at 0.7%. Industrial production at negative 0.7%, meaning that industrial production is worsening in the UK. Then manufacturing production is as expected at negative 0.8%. So that also is a big challenge for the UK economy, and preliminary business investment was up 5.9%. So, well, on one side, GDP surprised on the upside. Industrial production as well as manufacturing production were not doing particularly well. Both sectors indicating signs of contraction. So going forward for the rest of the day, we'll be having a series of economic reports impacting the US dollar, and these will be happening at 3:30 p.m. today. So first, we'll be having the core producer price index. Remember, the producer price index is basically a measure of forward inflation. So it measures the change in price of finished goods and services sold by producers. So we sometimes call it wholesaler price index. So when wholesalers sell goods to final retailers, these final retailers include supermarkets, shops, apparel stores, and so on. Then these shops tend to sell to the final consumer. So in this case, when you track the prices that are charged by wholesalers, you know that in the near future, those prices will be pushed forward to the consumer. And if those prices are increasing, then CPI also tends to increase. So in the most recent reading of US CPI, which we happened to see on Tuesday, we saw US inflation dropping 2.3%. So this was a big move towards the Fed's target of 2.0%. So now, if we happen to see the producer price index weakening or slowing down, then this would be an indicator that the next CPI will be much weaker. So in that case, we will be expecting the same reaction that we had on Tuesday. Apologies for that. So the reaction that we had on Tuesday was a dollar index weakening, and we saw the stock market making a strong rally. So if the producer price index comes weaker than expected, same as core producer price index, then that is expected to be negative for the dollar. But if there is a spike higher in inflation, then that should be positive for the dollar and negative for equities. So also be focused on retail sales. Remember, retail sales is basically a measure of the total value of sales at the retail level. So in this case, it's a statistical release. So the US government Census Bureau basically tracks major supermarkets, major retail chains, and apparel stores to see the total receipts that they have made in a month, and then they compare that over the next month and so on. So whenever you see retail sales moving higher, it's an indication that the consumer purchasing power is increasing and the consumer is healthy. So if people are not having as much money in their pockets, then they don't spend more on buying stuff. So in that case, retail sales tends to go down. So the dollar tends to be positively correlated with retail sales reports. So if retail sales are on the upside, then the dollar also tends to be on the upside. And of course, if the retail sales are weaker, then the dollar also tends to weaken. So lastly, we also be looking at the unemployment claims. So these are weekly report showing the number of individuals who filed for unemployment insurance for the first time during the past week. So in the prior reading, we had 228K. We're expecting a difference of just 1K. So in this case, a move from 228K to 229K. So this would be a slight increase. And if this happens, we don't expect much of a reaction in the market. But then if we see a wide variance between the expected value and what we get as actual data, then that would likely impact the dollar. So our worsening job market, in this case, would mean that we get a much higher number of unemployment claims. This would push the Fed to consider easing policy or cutting rates at a faster pace. And in that case, cutting rates at a faster pace would likely imply that we see a weaker dollar. So on the other hand, if the job market is strong, then the Fed can practice restraint and continue holding rates higher for longer. In that case, that would strengthen the dollar in that report. So those are three reports happening at the same time, and we tend to react to the average performance. So if, for instance, we get retail sales doing well, and let's say unemployment claims worse, but on the other hand, the producer price index weakening, then we'll be taking the average of the two. So on top of that, we have the Empire State or the New York Manufacturing Index and Philadelphia Fed Manufacturing Index. Still at the same time, both indices are still at negatives, indicating contractionary conditions. So for Empire State, we had 8.1. We don't expect much of a change, so we expect negative 8.2. On the other hand, in this case, Philadelphia, we had negative 26.4. We're expecting a slight improvement to negative 11.3. Either way, if it's still negative, then it's a contractionary read and not very good for the dollar. When manufacturing is contracting, it's usually not good for the dollar, and if it's improving, then it's good for the dollar. So given that we had seen that US GDP in Q1 came in at negative 0.3, showing contraction, then investors will be closely monitoring the Empire State and Philadelphia Fed manufacturing indices in order to make a decision on the state of US manufacturing. So this will be a pretty busy period at around 3:30 p.m. where we get all these data points impacting the US economy, and of course we'll be expecting increased volatility in US dollar pairs, increased volatility in gold, silver, as well as US equity indices. So later on at 3:40 p.m., we'll be getting a speech from Fed Chair Jerome Powell, where he's due to deliver opening remarks at the second Thomas Lobach Research Conference in Washington, D.C. So clearly, those are the key highlights for the day. And of course, as we head towards the end of the week, the main focus tomorrow will be inflation expectations quarter over quarter from New Zealand. SNB Chairman Schlegel will be speaking at 2 p.m. This will be impacting the Swiss franc. And of course, we'll be getting the preliminary University of Michigan Consumer Sentiment Survey, and this will be at 5 p.m. tomorrow. So that being said, there's a lot more happening in the markets, and I would like us to jump straight and try to understand what other things are happening in the markets this week. So, of course, if you have any questions related to the presentation, feel free to raise those questions, and I'll be responding to those questions as we continue. So, kindly give me a sec. All right. So among the key highlights as of this morning, I would say Boeing is one of the top highlights as of this morning. So Boeing emerges as the top beneficiary of Trump's deal making abroad. So Trump has been making this tour in Middle East, visiting Saudi Arabia, visiting the UAE, and of course, this tour is bound to have some returns. So we'll be trying to process some of the key highlights that we can observe from this meeting. So in this case, first things first, Boeing stock takes off thanks to President Trump as the plane maker scores its biggest order ever. So aerospace giant Boeing has quickly emerged as a top beneficiary of President Trump's deal making abroad. Shares hit 52-week highs on Wednesday after the plane maker scored its largest ever order from Qatar Airways. The deal follows the other orders that originated abroad over the past week. Boeing stock has surged more than 50% since its April lows following President Trump's unveiling of Liberation Day tariff policy, a dramatic reversal for a company that just last year was mired in safety crises, production delays, and leadership turmoil. It could be argued that Trump's return to the White House has benefited Boeing, fan strategists wrote earlier this week, pointing to the president's stamp for Boeing abroad. Last week, during the announcement of a US-UK trade deal, Commerce Secretary Howard Rudnick highlighted a $10 billion aircraft order, later confirmed to be from the British Airways parent company IAG. So what we have seen with Boeing is that on one side, Trump announced the Liberation Day tariffs. So these tariffs impacted a lot of countries that are basically customers to Boeing company. So these countries mainly implemented reciprocal tariffs, especially China, and these impacted the Boeing stock negatively. So later on, we know that just last week, we had an escalating conflict between Pakistan and India, and these companies had closed their airspace, and this was impacting Boeing negatively. And now we are seeing the big reversal with China reducing and creating exemptions for Boeing company. So in this case, China will be more willing to buy Boeing planes. Now we saw the UK making a trade deal with the US and committing to a 10 billion aircraft order for Boeing airplanes. And in this case, it's the British Airways parent company IAG. And now the biggest order is coming in from Qatar, where they basically decided to make a $96 billion deal to acquire up to 210 American-made Boeing 787 Dreamliner and 777X aircraft powered by GE aerospace engines. So the historic agreement will support 154,000 US jobs annually, totaling over 1 million jobs in the United States during the course of production and delivery of this deal. So Qatar recently offered Trump a Boeing 747 jet to use as an interim Air Force One, a gift that has come under scrutiny. Trump has defended his decision to receive it, saying only a fool would not accept it on behalf of the country. So clearly, we'll be watching some good volatility coming in from Boeing stock later in the market today. So another key highlight in the market is Nvidia. So Nvidia stock extends gains as Saudi Arabia set to spend billions on AI chips. US moves to rescind Biden's chip caps. So Nvidia stock jumped over 4% on Wednesday, but over 15% rally over the past 5 days that has put the AI chip giant stock back in positive territory for the year. So the gains come as US chip makers, including Nvidia, announced billions of dollars worth of deals with Saudi Arabia during an investment forum attended by President Trump on Tuesday. So Nvidia said it will supply several hundred thousands of its AI chips to Saudi Arabia's AI venture Humain over the next 5 years, beginning with the sale of one of its latest Grace Blackwell AI supercomputers, using 18,000 of its advanced GP300 chips. Humain is a new AI venture owned by Saudi Arabia's $925 billion public investment fund and chaired by Crown Prince Mohammed bin Salman. It was launched just a day ahead of Trump's visit to the country. Bank of America analysts estimated the total value of the deal at $7 billion and raised its price target on Nvidia stock to 160 from 150 in a note to investors on Wednesday morning. So clearly, we should be expecting to see some good activity from Nvidia stock later in the day today as the US market opens. And if you look at Nvidia stock, I'll just give you a highlight. This is how it's performing. So yesterday it was up 4.16%. Year to date, it is negative 2.15%. But this is a main recovery. Having opened the year at 138, Nvidia had dropped to a low of 94, and now it has recovered back to 135. So it's just a matter of time. Perhaps even today it could be getting into the green territory. So as for Boeing, the company stock is up 19% year to date. Of course, if you look at the last 1 day performance, it was up 0.64%. In pre-market trading is up 1.11%. In the last 5 days, it's up 9.5%. Last 1 month, up 31%. And of course, year to date, 19%, meaning that it has mainly recovered from the big dip that happened on April 2. Notice from April 2, it moved from $168 all the way down to 136, and now it has made quite a good recovery. So main news coming in from Trump's tour of Saudi Arabia are impacting individual stocks. So we also have this other company called Supermicro, which has gained by 40% so far this week, and these are the key levels to monitor. So for Supermicro, I'll try and identify something here. So late last month, the company spooked investors by cutting its fiscal quarter 1 2025 guidance ahead of earnings, citing weaker enterprise demand and delayed customer purchases amid macroeconomic uncertainty. So the move sent the stock tumbling below $30, its lowest level in months, as traders digested the revised outlook. So despite the lowered forecast, SMCI or Supermicro managed to stabilize quickly. Within a day, buyers returned, pushing the stock back to above that level and eventually to 33.5 by the start of this week. So Tuesday's rally added fuel to the recovery that has put SMCI back on the radar of growth focused investors looking to gain exposure to the AI boom. So if you look at the competitive edge of the company, Raymond James' upgrade is rooted in Supermicro's growing share in the fast expanding AI infrastructure market. So according to the firm's estimates, SMCI commands about 9% of the global AI server market, valued at around $145 billion. Independent research from Del Oro Group supports that claim, placing Supermicro ahead of several larger branded server suppliers. So the company's strength lies in the ability to deliver highly customizable and energy-efficient hardware solutions tailored for large-scale AI workloads, a segment of tech investments that continues to draw strong institutional interest. So, of course, Supermicro is making some big news as of this morning, mainly because yesterday it closed 8.21% higher. It closed 0.85% higher. But then if you look at the year-to-date performance, it has literally gained by 8.21%. So, sorry, I'm getting the wrong stock here. Trying to get the right one. So, Supermicro was making news yesterday because it was up 15.71%, though in aftermarket trading, it went down 2.91%. So in year-to-date trading, you'll notice that the stock is trading at 45, having opened at 30 at the beginning of the year. So that's literally a 50% gain. But then we also remember that somewhere around Wednesday, 19th February, the stock had already gained by 100% since the year started. So after dropping all the way back down, I believe it bottomed around 29.82. And now we are seeing a magic rise in Supermicro. Of course, investors are back and it's making some big moves, almost trading like a meme stock. So we should be watching this closely. In the past 5 days, it's up 36.56%. Of course, we should be seeing more activity from the stock later today. So the companies for Micro is also benefiting from the deals that Trump is signing because with AI being a key theme, of course, there will be more demand for AI infrastructure, including servers and data centers. So UnitedHealth, under criminal probe for possible Medicare fraud, WSJ reports or Wall Street Journal. So this is one stock that is making news, but not on the right side. So the U.S. Department of Justice is carrying out a criminal investigation into UnitedHealth Group for possible Medicare fraud, the Wall Street Journal reported on Wednesday. Remember, the UnitedHealth Group is the biggest medical health insurer in the U.S. The company's stock slipped 8% in after-hours trade, following the report, which follows a series of problems at the insurer. So on Tuesday, the UnitedHealth Group CEO Andrew Whitty stepped down unexpectedly, and the company simultaneously suspended its 2025 financial forecast due to rising medical costs. So on one side, they have a case to answer under the DOJ. On this other side, the CEO has resigned, and on that other side, the company suspended its 2025 financial forecast. So, of course, the reason given was that they are experiencing rising medical costs. So it's a company in big trouble. So the announcement sent shares plunging nearly 18% to a 4-year low, while the exact nature of the criminal allegations is unclear. The journal said, citing people familiar with the matter, the probe by the healthcare fraud unit of the DOJ's criminal division has been active since at least last summer, meaning that they have been under investigation for the last 1 year. So in February, the journal reported a civil fraud investigation into UnitedHealth's Medicare practices. The company had then said that it was unaware of any new probe. So in the same month, U.S. Senator Chuck Grassley launched an inquiry into UnitedHealth's Medicare billing practices, requesting detailed records of their compliance program and other related documents. So clearly, it's a company that is going through a lot within the space of 1 week. So if you look at the year-to-date performance, I would say right from 16th April, the stock has just been plummeting down and down. So having moved from $585 per share to the current 308, and of course in pre-market trading, people are still shorting the stock. So even if the market closed at 308 yesterday, the opening price today is around 293. So this basically means that we should be expecting some further downside momentum in the stock. And one key highlight is that United Health Group has one of the top weightings in the Dow Jones index. So whenever I talk about the Dow Jones 30 index, know that one of the biggest companies in the index is United Health Group. And if United Health Group is not doing well, then the Dow Jones also performs badly. So if you look at the last 2 days, and you compare the SP 500, the Dow Jones, and the Nasdaq, you'd notice that the Dow Jones has been really slacking and moving further back downwards. And the main reason this has been happening is because one of its top companies, United Health Group, has also been losing a lot of money since the week started. So in the last 5 days, the stock is down 21%. In the last 1 month, the stock is down 47%. And year to date, it's up down 38.95%. So clearly, it's a stock that is going through some big drop. So in the last 5 years, you notice that the stock has had some, I would say, some good gains. But then, judging from the price action since the year started, or since the April to Liberation Day, it's more of a big sell-off in the stock. So outside of that, I'm trying to find if there's any other major highlights. So of course we have seen this one. Qatar Airways orders 160 Boeing twin aisle jets during Trump's visit. So still checking. So Trump heads to UAE as it hopes to advance AI ambitions. So US President Donald Trump was due to end a brief trip to Qatar with a speech to US troops on Thursday, then fly to the UAE, where leaders hope for US help to make the wealthy Gulf nation a global leader in AI. So the US has a preliminary agreement with UAE to allow it to import 500,000 of Nvidia's most advanced AI chips a year, starting this year, Reuters reported on Wednesday. So in this case, it's more of an Nvidia development where UAE needs to import at least 500,000 of Nvidia's most advanced AI chips beginning this year in order for them to build their AI capacity. So the deal would boost the country's construction of data centers vital to developing AI models. But the agreements have provoked national security concerns among sectors of the US government, and the terms could change, sources said. So a string of business agreement has been inked during Trump's 4-day swing through the Gulf region, including a deal for Qatar Airways to purchase up to 210 Boeing wide-body jets, a $600 billion commitment from Saudi Arabia to invest in the US, and $142 billion in US arms sales to the kingdom. So the trip has also brought a flurry of diplomacy. Trump made a surprise announcement on Tuesday that the US will remove long-standing sanctions on Syria and subsequently met with the Syrian interim president Ahmed al-Shara. So on Thursday, Trump will address US troops at the Ul Udeid air base, which is in the desert southwest of Doha, Qatar, and hosts the largest US military facility in the Middle East. He then flies to Abu Dhabi to meet with UAE President Sheikh Mohammed bin Zayed Al Nahyan and other leaders. AI is likely to be a focus point for the final leg of Trump's trip. Former President Joe Biden's administration had imposed strict oversight of exports of US AI chips to the Middle East and other regions. Among the Biden administration's fears were the priced semiconductors would be diverted to China and buttress Beijing's military strength. So Trump has made improving ties with some Gulf countries a key goal of his administration. Before the proposed chip deals in Gulf states and the UAE in particular come together, the region would become a third power center in global AI competition after the United States and China. So Trump had dangled the possibility of making a side trip to Turkey to join Russia-Ukraine talks before returning to Washington, but a US official said on Wednesday that the president would not make that stop. So that's the key highlight from Trump's movements in the Middle East. So of course, today being the last day, we expect to see more updates and more developments from the UAE. So Trump's Syria announcement surprised his own sanctions officials. So in this case, Trump basically removed sanctions on Syria. And was a key development in ensuring that Trump and the US has more friendly relations and there's a long-term peace in the Middle East. So outside of that, trying to see if there's anything else to add to the key developments this morning. So Trump's Middle East tour has more substance than the White House let on. So regional diplomatic ambitions are expanding, and there's the big Syrian gamble by removing sanctions. Good luck, Syria. I don't think there's any other highlights. So at this point, I believe we can check one more website before we dive into some technical analysis. So the website we'll be looking at is, in this case, the financial visualizations website. So in this case, we're trying to understand the performance of currencies as of this morning. So, of course, the Japanese yen has been the biggest mover this morning, having gained 0.66% against the dollar. The Swiss franc is closely following, gained 0.55% against the dollar. And then on the losing side, it's both the Australian and the New Zealand dollars are losing slightly to the US dollar. So both the euro and the pound have some slight gains against the dollar, whereas the Canadian dollar is little moved against the dollar, so almost at the same level. So with that in mind, we know that the strongest currency as of this morning is the Japanese yen, and the weakest is both the Australian and New Zealand dollars. So among other key highlights, UK GDP growth above expectations, but we saw construction and manufacturing both taking a hit. Commodities are midway in the negative, especially oil, gold and silver, copper, soybeans, coal and steel. So Swiss economy records strongest growth in 2 years. European stocks lower corporate results. Corporate results disappoint. So Brent crude oil sinks over 3%. Japan machine tool orders slow in April. German wholesale prices rise the least in 4 months. And South Korean won extends rally. So those are the key headlines as of this morning. And with that, now we can do some technical analysis and try to understand where the prices might be headed next. So before I do any further analysis, let's just check the comment section to see if there's any questions. And see Moses Bridge in the copper from Telegram. Thank you, and thank you for joining us. What's happening in the dollar index? Of course, we can start with that. It's a pretty good question. So the dollar index has been on a weakening journey since Tuesday. And this is mainly after we saw US inflation dropping slower than expected. And as a result, there's that overall expectation that the Fed may consider cutting rates in the near future. The Fed is getting closer to its inflation target of 2.0%. So rate cuts tend to be negative for the dollar. In this case, we expect the dollar to continue weakening. So yes, the dollar index had made a 3-week comeback, but now this week we can see that early gains that we had seen earlier in the week on Monday, Tuesday, are now being erased on Wednesday, Thursday. Sorry, on Monday, this is when we had a strong rally. Tuesday, Wednesday, and today being Thursday, we are seeing the dollar index pushing back downwards. So With that in mind, we have seen other currencies taking advantage of that. The Swiss franc has now been gaining against the dollar. So in this case, a complete reversal from the strong rally we had seen at the beginning of the week. So the weekend gap is still not yet closed. So we could be seeing, yes, the market going for the weekend gap. So for the Swiss franc, good chance we see the market going for 0.83130. Then we have Euro USD. Of course, the euro is making a comeback. So we had a head and shoulder pattern and then a big drop towards this particular area, which served as a key level support after the pullback here. But now we are seeing the euro continuing with the bullish momentum. So from the 1 hour time frame, notice that we had a pullback yesterday in the evening and then today a continuation. So of course, I would expect to see the market retesting yesterday's high. So if the current bullish momentum continues, then good chance that we see the euro retesting this area here. So pound USD, we had seen a big sell-off yesterday in the evening, but today the pound has responded with similar strength. And of course, after the GDP data, we had quite also, so I would be betting more on a kind of price action. So rather than a trending market, I would expect this market to be moving this way. So more of a swings up and downs for the day. And of course, we have USDN, which we had identified as the strongest mover on Monday towards the upper side. And then the whole Monday move was eliminated on Tuesday and Wednesday. And then today we are seeing more of a continuation. And of course, with the yen being pretty strong against the dollar, we've had a breakout retest continuation kind of a pattern. Then in this in. So of course, it's not even that 201. You can move even higher. In this case, we are looking at the exact low here. So we are looking at 3207 as the next potential target for the gold bulls who bought the dip. So in this case, a good chance that we see gold bouncing strongly from the current levels and getting all the way up to 3207. So Brent oil made a very good rally last week, and early this week it had continued moving higher. But now we are seeing a very strong reversal. Yes, we had an inverted head and shoulder pattern here, which led to a very strong rally towards this area here. Notice the coincidence of these levels here. So here we had the market like really failing to break higher, and then the market goes up to the same level, fails to break, and now we are going back to the neckline of the inverted head and shoulder. So in this case, of course, the overall expectation is that the price gets back to $62.615 per barrel. So on the other hand, remember we mentioned that OPEC is expanding oil production. So with oil production being expanded, sanctions on Syria being removed, of course, we expect oil to be diving. So US 30 or the Dow Jones has been on a decline for the last 2 days, Tuesday, Wednesday. So almost erasing all the Monday gains. So good chance that if people continue reacting to United Health, then we might continue seeing this bearish momentum and potentially the Dow retesting 41,612 price action level. So as for the other US equity indices, beginning with the UT 100 or the Nasdaq, We are seeing some pullback, some form of breakout from the consolidation that lasted the entirety of yesterday. So yesterday the markets were not moving much, and of course here we are seeing some form of breakout, which implies that the markets might be pulling back for a while. But then the idea is to be buying, given the developments we are seeing with Trump, the potential of a Fed rate cut. Then it makes more sense to be looking for bullish positions. So while on one side we have a breakout towards the lower side here, more patience is needed, and we wait until we see buyers coming back in. So same case applies to the SP 500. Yes, we are seeing some form of problematic pullback here with a breakout at this potential area here. But then the idea is we wait for the market to play it out, knowing very well that even on the daily chart, these markets are moving higher. If you look at the UT 100, you go to the daily chart, this market is going higher. And for the Dow Jones, if you go to the daily chart, yes, this is the third consecutive day of losses, but at some point you should be expecting the market to bounce stronger. So for now, for today, perhaps you could be looking for more shorts on US30. But then for the Nasdaq and SP 500, it makes more sense to be bullish. So Bitcoin is entering this phase where I would say in the last 5-6 days, it has been on a sideways momentum. So in this case, whenever you see such a sideways momentum, then the bottom of the momentum area or the support area becomes a nice entry for buyers. And since the overall momentum is bullish, then on the upper side, you should be looking to exit the buys and then buy even more at around 11.397. So New Zealand USD, still a weak currency against the dollar, also making some sideways kind of performance. So nothing much is happening here. So it's a market that is likely headed to the sideways. So as for European equity indices, they had a pretty good resumption of bullish momentum. So clearly, opening with a gap today and pushing towards the upper side has been quite an enormous opportunity. Of course, we expect the market to be tracing back to newer highs. So clearly, for France 40 stock market index traders, should be looking forward to the market retesting the previous high around 7,880. So for the Spanish 30 or for the IBEX, so clearly you can see that the market was in a consolidation, but now it's on the verge of a break. So here we are looking at a market that is trading along these conditions. I would say between these, it's more of an ascending triangle, and we are on the verge of a breakout, which would imply that the market goes for a new all-time high. So for the German stock market index, here we have some form of consolidation again. So if you look at these and you try to understand what's happening here, so it's more of a market that is just moving sideways and now might potentially break and head into a new high, given that we are seeing longer tails on the lower side, indicating a rejection of lower prices here. So lastly, for the EU 50, clearly it's a market that is moving sideways. So we are not seeing much of a performance here. So in this case, if I do a rectangle, you'll notice that this market has just been moving sideways with this as the resistance, this as the support area. Of course, we should be expecting to see more activity from this, but then for now, it's more of a sideways momentum market. So that's it for the day. I would like to thank everyone who joined this session here. Thank you for your questions. So my take on gold, I think we've already done that. If you are late, maybe you can check the recorded version, but pretty bullish as of this moment. Next for Bitcoin, so far it's still sideways, but then we should be seeing some bullish momentum later in the week. CPI came out lower than expected. What is the most realistic expectation for PPI data today? Again, as you mentioned, retail sales impact on USD. For mixed readings, which one will have the most impact? I would say retail sales. We want to know how much Americans are buying. So a track on retail sales will have more impact because you want to know if they are buying more, if they are buying less, and if they are buying, what kind of goods are they buying. So there will be a sector by sector analysis. And of course, for PPI, PPI will be more like supplementing the CPI report that we saw earlier in the week. So in this case, in case of mixed readings, I would go for retail sales. And in case of a strong PPI, weak PPI, meaning that prices for producers slow down more than expected, then that would be a dominant driver in the market. Hello, John Garoya. Can see Francis Wanjohi in the house. Take on gold, we have already covered. So that's it for the day. So thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. Remember, if you don't have an account, to register one using the links in the description below. And if you're just starting out your trading journey, check out the Novice to Pro course. It's available on the FX Pesa YouTube channel. Go through it. Make sure you practice those lessons. Open an account. You'll get a demo to practice your ideas before you go live. And for those who enjoy our Bullish Banter podcast, then make sure to check out the latest podcast from FX Pesa YouTube, as well as other podcast platforms. So I'll be showing you what we have in the most recent episode. So notable trading journey of Uganda's Forex giant. There's another episode, I believe so. I think we just haven't put it in the right order. But then if you just visit the FX Pesa page, then you should be able to see it from videos. If you just go to videos, you'll be able to notice the most recent one. Yeah. So that's it for the day. Thank you very much, everyone. And I hope to see you on the next session. Enjoy your day, and I hope you have a profitable one.